Hello guys, another video. It's Tuesday 3:40 as I record this video. I'm not a financial advisor. All my content is for my personal use and educational purposes only. And let's get right to it. This is this was something I had before. Let's go to clean chart. Okay. Alright, so about 3 days ago, um made a video before the opening, and we had a potential pullback, but as not as much as many would think, right? And I actually saw a lot of Instagram posts and um, analysis wanting gold to like come all the way back down to here for some reason. But if you haven't seen the video I made in regards to the war that is occurring, unfortunately, and how that's driving the price of gold, I'm going to leave that somewhere over here on the top, because it's important for you to understand that right now what's driving gold is sadly the war and the uncertainty that people have in regards to the situation. So, as you know, gold is a precious metal and people use it to back up their, I guess, losses in other financial markets, and also just, general hedge, um, instrument or whatever. I mean, it's just precious metal. People use to protect themselves with it, blah, 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 blah. You know this. I want to talk about a few things. One of them is over here. Another one is over here. Why is this happening? Why isn't gold coming back down? Why isn't it breaking? Right? And also, why isn't it breaking up? So, to begin with, and if you're new, welcome. This is gold trading only, 4-hour time frame. Yes, we see double top. Okay. In normal market conditions, yes, this should have broken down and at least try to grab more liquidity over here. But I'm not going to go back into that argument. We have to adapt. And we're adapting to the fact that gold is about to break up higher, at least to the 1950 psychological price level. That's all we have to keep in mind. That's my understanding and how I interpret the market. Repeat, it's not an order for you to go buy gold now. I repeat, do not do anything with your money. I'm just talking to you about how I read my charts and stuff. So anyway, here we are. This area of consolidation market failed to break the weekly highest high right over here. It did trade into it, which is a big clue, especially when this candle fails to break to this support. Okay, that's what you gotta see. This is the 4-hour time frame. Remember, it helps a lot to see these bigger time frames, because now we're seeing prices respecting a pivot price. The market is respecting a pivot price, which happens to be 1920. And if you go back to my videos, go to my Instagram, I have published this. Keep an eye on 1920, pivot area, pivot range, pivot price. And I'm going to adjust it to 1920, because that's where the market is. Over here it failed to break up. Over here broke. This wick bounced pretty much around those prices. This big candle closes there and it fails to trade into the lower range of this lower area of this range, and that's where market bounced, and it's showing me rejection on that price level. So we could have traded this pullback and this pullback. And my previous video on the analysis, this pullback, I remember I talked about these areas as being the support and the pullback range, and not this. A lot of people are focusing here, but the reason why, and I explained it in my video, the reason why I thought that would be a more convenient area is because of the strength and because of the situation and how delicate it is. And that every time since the war started, every time a little pullback brought a big reaction. And yes, in this case, I'm talking about a pullback to the downside and a big reaction to the upside. Okay, notice that little pullback, big reaction, minimal pullback, reaction, pullback, reaction, pullback. This is just going to keep going on until gold reaches at least these levels of resistance. And I want to see gold at 2000 by the end of November, probably. But that's trying to be a wizard about it, and I don't want to do that. And so I'm going to go into lower time frames because we are going to see how we could have traded this. And it's going to help you out a lot. I mean, I think so. I hope so. The way I interpret the market, because I've been able to successfully better my trading as I started interpreting it the way I am doing so right now. And so let's begin. Areas of interest. We mapped this out already from the 4-hour time frame, so we're going to keep it there because we're going to study the lower time frames. This was hard to obviously anticipate because yes, this pullback could have it could have been lower, but it didn't. So here's where patience pays, and you study what happened, and you just got to map it out. So 1 hour, here's an interesting support, which by the way, market could it could range here throughout the week, and I think that's what might happen. But there's another pattern that I want to go into in a little bit. But so what happened? Price bounces it, right? I immediately see, like, we see this rejection off of this price, and we see this intention of it breaking up. And as I was looking at this, I thought, oh wow, this is it. This is the moment when that pullback was minimal, and now it's gonna break these resistance, right? Turned out it wasn't. When I saw this big wick, I was like, whoa, that's that shouldn't happen. If my idea was immediate reaction, why did it stop? And well, um, I can't tell you exactly why, but I can tell you what I think and what I believe and what I can, you know, in my logic is the answer, and that is the fact that on Thursday there's going to be a big moment for the U.S. dollar when Powell speaks, and I'm sure he's going to give at least a few reports on how the economy is doing, and that could drive the price. That could give it more strength to the upside, or it could give it a reason for it to make another pullback to this support. So it's consolidating also because of the uncertainty. It already made a big push up. It's showing that this is a strong rejection, resistance, sorry. And it's now just like, this is the calm before the storm, if you want to see it that way. So, okay, we saw this wick. Price comes, tries to trade back to it, fails to do so with this big candle showing rejection. We see it consolidate within this time, and then a breakout of this support. So this is the things that you gotta keep, you map out. You have to map these areas out. I'm telling you, they help me a lot when I map them out like this. Wherever the candles close and wherever the previous ones open and stuff, those are pivot areas. So you wanna trade to them and from them. Okay, so this is another area. The fact that these wicks appear here and these two candles perfectly respect that price, that's also an interesting area. Now, in the 1 hour time frame, keep this in mind in your head, but I have to get it out of the way because I have to point this imbalance out. And it played a big role in this pullbacks scenario. So that imbalance, notice how the market trades into it but respects it. And that's where, from this candle that you saw, well, first of all, this wick respecting these wicks, right? This candle closing within the range of the wicks but not under tells me a lot. And it tells me even more that wick that trades into that imbalance area and the candle closes. Of course, it would be too soon to say buy, so you keep waiting and see what happens. And you can study at least 3 to 4 candles after the one that you think is the one that's telling you a clue. And that's what it's all about. Like, there's not a specific candle that's the one. There's your signal. Oh my God, you missed it. Or no, it's not like that. You have to. It's a trial and error, and eventually you do get confirmations. But this is clue number one. This is clue number two. Another wick, again respecting the range of these wicks, and eventually this was your kind of confirmation, like, hey, market is showing me, and now it's showing me intention of going up, simply because this candle has a lot of volume covering these two and not respecting the close of this candle and the open of this candle, right? That's the pivot price in this case. It breaks up, and then you have this, which the fact that that candle closed there and respected that support, it's also a clue. If this candle right here, this is also a very important candle, if this candle would have closed anywhere under the 50% range of this wick, say somewhere like down here, then that completely throws away this in your head ideas and footprints and whatever. Now, why didn't that happen? Because of these areas, because of the behavior I had before. So from over here, you could have been a bit more in quote sure about the idea that it was going to go high from this point on, because it was showing me rejection. Okay, so that's how you shouldn't get, I guess, stuck or trapped in the emotional part of it. And that was not a pullback to come down. That was a rejection of this pullback to go up. Okay, so I want to go on lower time frames so you can see this better, because yes, 1 hour is important. The 1 hour, keep that price in your mind. This is perfect and very important right there. Okay, so now we see this 1 hour. We go to 30 minutes. 30 minutes. Look at these. Boom, boom. These when two candles like this are the same body, or at least 70% or 70-80% of the bodies are the same, that's just, you would say, order block. Like, come in, gets orders, come out into that support level. You see that? It trades into that support level. It respects it next. This one respects it as well. This one respects it. This one trades in and comes back out and respects it again. So that's your clue. That's your moment in which you want to get in, right? And stop loss would be right there, like at least in the middle of in here in the middle, because if it were to trade down, then you could just get out very fast, lose the minimum. But that's what it's about as well. Yeah, you could have put in it here, but that's risking more. I'm not gonna get into how you trade and how I trade, but it's just an idea. Okay, so that's how you could have traded this pullback. I'm showing you these footprints in lower time frames so that you can start seeing them for yourselves. Notice again, this is another big clue, the fact that these candles are all to the downside, and around an important price level there's a big engulfing bullish candle. It doesn't mean that just because there's a engulfing candle the market is going to go up or down. It depends on where that candle is coming out, right? In this case it came out and it rejected within an imbalance area and it went toward a pivot support. So that's a big clue as well. This wick, right? Eventually, the fact that this resistance, I mean, was broken by this candle. So you start seeing these moments. 5 minute. We can even go into 5 minute to the 1 minute. We can go. Why did this go all the way over there? Here we are. Okay, and then if you've seen my videos also, you know that part of my strategy is called V shapes, A shapes, V shapes. And we see a V shape here. 1, 2. From here to here. That's a V. So that to me, in my strategy, according to my comprehension and my interpretation, is liquidity grabs. The market comes fast into an area where it gets orders and it rejects really fast. And that makes a V shape. There's a video I'm going to leave at the end of this one called V shapes, A shapes, footprints in the market. And that you can see it over here. This is a V shape in the 1 minute time frame. But if you're trading here 5 minutes and you see this, there's always a pullback, a second attempt, rejection. So as you see price break this area where the V forms with these candles, you could comfortably buy whenever the price retests that area, and notice how it respects it. I'm going to point it out right there. You see that? And that is extended to where the V is illustrated. There's a V. I'm going to get this out of the way as well. There's your V. Market breaks that resistance, test that area. Yes, it trades into it, but that's a better, even a better entry. And as soon as you see that candle respect and not close down over here, but rather come back to the upside, that's also a big clue that this indeed is a rejection and not a pullback to trade down. Okay, I repeat, these clues that I have been talking about in this specific example are validations for a rejection of this pullback to trade higher, and they're not a pullback of this impulse to trade lower. This is a pullback. This is the impulse. The impulse came from in the past over here. The trend is your friend. Impulse, pullback, continuation. All of this that I've been showing you and talking to you about today are the footprints that help you understand better what's a pullback, what's a rejection, where is the market breaking structure, how can I be sure that that is the break of structure, how do I know that the price is not going to go back into that area. Well, this is all happening, I'm telling you all right now. 1 minute time frame, just to show you how it also comes out, the V shapes. This was that V shape I was talking to you about, from here all the way to here in 5 minutes. In the 1 minute is right here. You see that? It's so perfect. Like if you really take your time and go in, find these, you'll see that whenever it starts, that's the opening. Look at the close, look at the quick. So it's perfect, man. This happens over and over. Oh, is that a 1 hour? One arrow. I'm sorry. Whatever. Here it is. Boom. Right there. V. Breakout. Attempt. Boom. There it is. So this is how you could have gotten in. A lot of people don't go into the 1 minute, but I do, and I guess it's up to you. But let's see. Let's see. Where are we now? Yes. Okay. So that was over here. Now let's see this pullback. That was here. Now I want to show you this pullback. This was the opening this morning. There's a big up and down. We anticipated that, and we anticipated this pivot price of 1920. So why is that price 1920 pivot for me? Market fails to break, breaks, a wick around it, another wick that doesn't get to it, but again, rejection. So it's showing me that around here something happens, whether that's the market crossing down or up or rejection. And so we spot it and we map it out. We put a line right where those candles, where this one closed and this one opened, and now this one closes there, this one opened, it traded down a little bit, but it bounced off of it. So that's your key pivot price. And how could we have gotten in here? Then we go into the 15-minute. You had time to realize this candle and then this wick. This closes, this one trades into these areas where these candles close and where these wicks showed rejection, and it makes a wick and then closes pretty much the same size and a little bit more than this one. That's your clue number one. Clue number two, this candle does the same thing, respects that one, that wick, and it rejects pretty quickly off of this range and closes above the 1920. To me that was my confirmation, because I guess I have more. I'm used to seeing this, and I don't like to, fall into traps, emotional. I've worked hard on my emotions, and I've managed to, little by little, trade with less emotions. This could have been a more conservative confirmation, but I'm not done. We go into the 5 minutes, because in the 5 minutes there's your V right there. This was also a nice confirmation where price fails to break lower than these candles over here, and then a rejection. The 1 minute showed me relatively same behavior, not such a perfect V. I wouldn't tell you that there's a V here, maybe this, but V's usually don't, this doesn't happen in a V. If this was a V, that lower to this low wouldn't happen. Usually when there's a V, that's the lowest point, and then there's a little pullback, and then a fail to reach the low, and then a breakout. So I wouldn't have felt too comfortable in the 1 minute. But again, if you're a bit more conservative, obviously you have to map that resistance out, and whenever you see that break-in, then that's your confirmation that there's a break of structure over here. Yeah. So yeah, that's it. Right now, what's happening? We got A shape, A. This is A shape. So the market is now ranging back toward the 1920. I'm gonna go back to the A shape and show you. 1 minute. There's a perfect A. Up, down, right on that price. Break of this support. Pull back to that support. Fail to break up. Continuation. And is breaking these structures over and over again. Right there. Right there. Right there. You see that? It's left a bit of imbalance around, but that's fine. And remember, we have our trading, we have our map, we have everything mapped out, so we shouldn't be nervous about this, right? That's how it moves. It's fine. It's just searching for another rally down. It's I don't know if you say that rally down, but another, So yeah, whenever market breaks one of these resistance areas and then coming down respects it as a new support, then that's your clue for it to come back to the top. Right now it's coming down, it's showing it's respecting resistance areas. There is a support right here that price might respect. There's a psychological level of 1920 and a pivot, midterm pivot, and very important pivot price of 1920. So just wait and see. If we talk about trading sessions, New York is about to go close and its opening price was here. So the market went down, traded back into the opening price over here, right? And now it's just coming all the way back down. So it's ranging. It's ranging within its time of opening time. So maybe the market when it closes, this might get to here, and then Asia, let's see what Asia could do. In that case, this is 5 minutes. Asia is gonna open around, it usually takes a bit of time for Sydney starts first and Asia, so just a little space. Yeah, Asia is gonna open maybe around here, and what Asia could do is retest New York's low to grab liquidity around that psychological 1920 price, and then try to go back up to its resistance, and it's gonna range. The fact that New York failed to break out of that longer term weekly high from last week, then it's gonna stay like this for a while, at least until tomorrow to Thursday, when Powell speaks. I call him Powell because it's a big pow to the market. But yeah, I hope this video has helped you guys and that your trading is getting better and better. Okay, I'm gonna leave it there so we have a nice, relatively quickly video for you to interpret and understand. Once again, I'm not a financial advisor, and thank you for watching. Like, comment, share, subscribe. Bye bye.